What's behind the obsession with Opendoor? Coming up, we'll hear from the investor Eric Jackson, who sparked this frenzy, find out where he thinks the stock is heading from here, and we'll find out why Eric has been hanging out outside of Drake's house. So let's get to it. This is Ticker Take.
All right, John, we're returning to the stock story of Opendoor.
Yeah, because Caroline, we did a video about Opendoor about a month ago, but this has become one of the most talked about stocks of 2025. It's an online real estate platform, and it's gotten a lot of attention because of the investor Eric Jackson. He's very bullish on the company. He's made a compelling case, and a lot of people are listening in part because Eric's had success with other big calls like Carvana in the past.
Yeah, and the stock has continued to climb, and in fact, it's more than doubled since we did the interview.
Yeah, and a lot has also happened at the company since we did that interview. A CEO shakeup. Eric has started a dialogue with management. The push for changes in the boardroom as well, getting a co-founder presence back in there has been a priority for him, so there's a lot going on.
Yes, but you left out one key detail, the fact that Eric has been staking out Drake's house, trying to get him to invest in Opendoor.
Yeah, so we wanted to pay Eric a visit to get some more context on that, plus his outlook for the stock itself, and beyond Opendoor, some of his other top stock picks.
All right, let's hear from Eric.
Eric, good to see you again. Welcome back to Ticker Take.
Good to be here.
So a lot has happened since we last spoke to you about Opendoor, including the fact that the stock has basically doubled. Why is that?
I think people are excited that there's a Carvana-like turnaround story playing out. This is not a meme stock, in my view, where it just is like a shooting star, but there's real value here. A lot of people that I hear from the retail community say, I missed Carvana. I'm not going to miss this one. And that's why they are excited to get in at a very early stage.
Outside of the stock movement, a lot has been happening, including the fact that you are now here outside of Drake's house. How did that come about?
Was talking with my 16-year-old son and just about how much I loved Opendoor and what a great opportunity it was. And he said, Dad, why don't you try to do something to tell that story to a much wider audience? There's only so many people that watch CNBC and Fox Business and things like that. So what if we just go over to Drake's house? He's not too far away from us. We start talking about why you like Opendoor and try to convince Drake to buy a share or more. And he said, but Dad, if you do it, you got to come here every day until he actually follows through and buys it. And I said, really? Why is that? And he said, oh, that's the way it works now on social media. It won't be effective unless you come every day until he actually buys it.
Have you heard anything
from Drake? Not personally. I mean, I've spoken to some of the security folks here. I've been very pleasant to deal with, and they've told me that I need to talk to a guy named Future, who's Drake's business manager, and we will be doing that hopefully soon.
Maybe that was Future.
That might have been Future there.
Yeah.
But still to come.
However, a lot of people have been hearing your message, including in the entertainment world, comedian Rob Schneider, but also just investors in all sorts of countries around the world, which you've been talking about with the so-called open army. What's the big takeaway from that, in your opinion?
I didn't expect it. This has been like 8.5 weeks, and it's the biggest thing since GameStop, I think, in terms of a retail response, and it's been phenomenal. I've heard from people in Afghanistan, Mongolia, Antarctica, and I didn't even know people cared about Opendoor in those countries. I mean, Opendoor only operates in the U.S., and so it's been phenomenal. But I've got lots of contacts now if I ever travel to those places in terms of restaurant recommendations and all that.
Well, I mean, we're on Ticker Take all about the democratization of the stock market. One of the net things I think you want to accomplish, even just with trying to engage with Drake, is the fact that there are a lot of people out there that are interested in money, but not necessarily invested in the stock market.
Yeah, 100%. A lot of Drake's fans, I'm sure, are kind of similar to a lot of the retail folks that I've heard from in the last few weeks who tell me, I can't buy a home. I don't expect to buy a home until I'm 50. I got to do something. The government's not going to come and drop a bag of money in my lap. I have to think of some way to basically jump the queue and get a little further ahead in life. And they think the stock market is a way to do that. But they think just putting money into Krispy Kreme donuts or whatever was the hot meme stock a few weeks ago is not the way to do it. They want to find something more durable. And so I think it's been interesting. We also want, we're from Toronto, and people in Toronto are very supportive of Drake. Drake hasn't gone through the best last year because he's sort of taken all these hits from Kendrick unfairly, I think. And so there's a part of me that like wants to support him as well. And frankly, if I was meeting with his business manager, I'd say, hey, you've done great. Obviously you're doing well in life. You're rich, but there's only so much I think a clothing line can do to increase your wealth. If you really want to, dramatically, become like the biggest rapping mogul, I think Jay-Z is the guy with worth $2.5 billion apparently. Drake's got to think of a way himself to jump the queue. And, whether it's finding a 100x stock like Opendoor, which I believe it is, or some other stock, I mean, that's one way to do it. And rather than sports betting and clothing lines and concerts.
Well, then let's talk about that stock expectation you have for Opendoor. Obviously, it's come a long way from when you first started acquiring shares. You talked to us about how you believed, based on execution and fundamentals, as opposed to meme excitement, that this could one day be an $2 stock. But you have increasingly been talking about further seeing gains as much as a possible stock price of $500 down the road. Can you just clarify your thinking there?
Yeah, I mean, $82 didn't come out of thin air. I mean, my initial July 14th tweet about the company was basically assuming that this company could follow a Carvana model where its price to sales forward multiple sort of shrank when things got bad, but then when people see that it's a real business, it goes back up. And so if you just basically assume it goes back up by 2028, 3 years from now, and to something like 5x forward sales, they're supposed to do 12 billion in sales in 29. That lands you at $82 a share. That's where I came up with that number. But since I've been involved, I've obviously spoken to people like Keith Rabois, who was a co-founder of Opendoor. I'm very hopeful, and I'm sort of pounding the table that he comes back in at the board level. And if he does, and they pick a killer CEO next, there are so many opportunities available to this company to be sort of like the Carvana of residential real estate that I think it's going to take hard work. But in 5 years, I think $500 a share is realistic.
So you started this dialogue with management. Obviously, we've seen changes at the top of the company. Carrie Wheeler, who'd been the CEO since we spoke, you were calling for change. She's left that role. You've also talked about the kind of person who you think long-term would be the right fit to be running this company. You've talked about somebody with a product background. So who exactly are you thinking about, and has management been receptive to that?
Central casting would tell me it's like a Travis Kalanick from Uber. He'd be ideal. I think he's got a job, so I'm not sure that he'll take it, even though I think he should. I think it's a bigger opportunity than cloud kitchens or whatever he's working on. But it would be somebody like that. So you got to be a founder type, entrepreneurial, tech infused, product oriented, willing to go to battle with dumb government regulations to kind of get the company where it needs to go, and just not have this sort of like managerial mindset, which is something that I've experienced too much with Opendoor just in the last few weeks.
So, one of the things you've said over and over again is that you don't see this as a meme stock, but in recent weeks, you've talked about it as a cult stock, not unlike, say, a Palantir or a Tesla. How come?
Well, cult stocks I think of as like durable compounding companies where retail got it first before Wall Street. And those are the two that come to mind, those Palantir and Tesla, in the last part of last decade. Meme stocks are more like shooting stars. We were talking about American Eagle for 3 days when Sydney Sweeney was doing it. Yeah. We talked about GoPro for 3 days, and now we don't talk about them anymore. Opendoor, we're still talking about it. So it's not a meme stock.
Now, obviously, some people are talking about it because they're excited about the story. There are other people talking about it because they are betting that the company's stock will go down. And this is a company's stock that a lot of people have short. It has a fairly high short position, short float. The view from you on the volatility that can come from that is what?
Well, it's a volatile stock. I mean, Carvana was volatile. Carvana, I got in at it was identified at 11 when it was coming back from like 350 on its way to 400. I got in at 15. I mean, there were 3 different times, I think, between $15 and $200 where the stock pulled back 25 to 60%, I think, in one case. And so you just, that's part of the mix. The short sellers, I don't think, are particularly well informed, and they're basically backward looking and saying this model didn't work before, therefore it can never work ever. And obviously, if they'd had that same mindset towards Apple when Steve Jobs came back, Apple would have shut down. Opendoor can change some things and be the Uber of residential real estate.
And for anybody who wants even more detail on sort of your fundamental case for the business, we talked about that in an earlier Ticker Tech video. They can check that out. Moving just from people who are shorting the stock to Wall Street. Everybody's always got an opinion on Wall Street analyst projections. But because of the run-up in the stock, if you look at the people who cover this company for a living, there aren't a lot that have a price target that's anywhere close to even where the stock is today. What do you make of that?
I mean, they're not paid to stick their necks out and take a risk. I mean, they want to hug like wherever the current stock price is. So that's why, because the stock was 50 cents or 51 cents on June 25th, they still have like $1 price targets for it. So if you're going to, make an investment decision by a Wall Street sell-side analyst, I mean, you're not going to find a 100-bagger.
So we'll see what happens ultimately with the management team going forward. We mentioned that Carrie Wheeler stepped down from her role, and it was reported that she had filed to sell her shares. What did you make of that decision? Obviously, that stock that she had held rose in value these last few weeks because of the run-up. But in her last post on X about the transition out of that role, she also talked in a very encouraged way about where the company was heading.
I think anybody in her position, I think I predicted this before she sold her shares. Like, she had the opportunity to do nothing with all these RSUs that she'd been given. And where the stock is going, I think, she could have been a billionaire. But she didn't choose to do that. She chose to sell immediately. And I think it's just because the human condition is like, our egos, if we were in her shoes, would be so hurt that she became a billionaire because somebody else came and proved to the world what a terrible job she did as CEO. And she just couldn't bear that, psychological trauma, that she decided to dump the shares instead for whatever she got for them, $35 million or something like that. Doesn't make sense. I mean, whatever. She's in the rearview mirror and we move on.
All right. Well, we haven't had a chance to speak with her, but we'll try to contact her. Now, in terms of investments you have made, you've spent a lot of time talking about Opendoor recently. You've been here outside of Drake's house talking about it on an almost daily basis. It's not the only company that you have a position in right now. You've talked to us about a number of them in past videos. But if you had to make a 1, 2, 3 of the stocks you have the deepest conviction around right now, with Opendoor being one of them, what would be number 2 and number 3?
The other two would be the other 100 baggers that I've mentioned this year: Cipher Mining and Iren. So IREN and CIFR. So they are both former Bitcoin miners. They're still Bitcoin miners, but they've transitioned to become AI data center builders and providers. And they're basically, now that's all the rage. Everybody's on CNBC now saying, we're going to run out of electricity next year to power all of our AI needs because we're all using ChatGPT so much. So those are two companies that got ahead of this curve years ago, built the data centers, made the power connections with the local authorities at cheap prices. And they're going to be sitting in the catbird seat now over the next few months, probably doing deals with the Oracles or the Microsofts or the Metas of the world for billions.
All right. Lots to keep watching. Eric Jackson, thanks again. Good to see you
Thanks
outside of Drake's house.
Thanks for coming.
Our thanks to Eric Jackson for his latest on Opendoor and his other top stock picks. You can find more information on Eric in the description.
Yeah, where you can also find other ways to connect with us, whether it's our Ticker Take Investing newsletter, our podcast, or more.
And please don't forget to subscribe so you don't miss our next investing video.
See you next time.